Good morning and welcome to Market Outsiders. It is 9:20 a.m. Eastern on Wednesday, July 30th. We're about 10 minutes before market open. I'm your co-host Namaan, joined by Jenny Rae today. Jenny Rae, how are things?
Hi, Namaan. Hey, things are great. I see you're drinking coffee. Is that what's in your cup? Mm.
That's what's in my cup. It's a good morning.
Are there mornings that you don't drink coffee, Namaan?
Oh, very rarely.
Well,
Something is seriously wrong where I'm on like a 5 a.m. flight.
this was I'm sure you get it in though, right? Maybe not before your flight, but you make it happen at some point during the day.
Absolutely.
Um, I want to talk a little bit about coffee commitment today and Starbucks. We are kind of notorious Brian Nickel hype, hype folks, right? We think a lot of him and of the work that he does. And I just want to talk a little bit about an article that I read this morning that captivated my interest because what's happening at Starbucks right now wasn't initially what I anticipated would happen in the macro. And so I wanted to dig a little bit into kind of what is going on at Starbucks. They reported earnings yesterday, I think. And so if it's all right with you, I'll pull up an article and we can kind of dig through it. So this headline caught my interest. For some people, it might catch their interest because gloom and doom often does, but for me, it caught my interest because we've actually done some of the work on Starbucks, and we believe, in our earlier conversations, in the efforts that Nickel is making to turn around the company and the brand. And so when it said Starbucks profits plunge as turnaround costs add up, I did not immediately look through the article to figure out what the costs were or the profits. My only question, which is only answered way down in this article, is, but what about revenue? Because I get really worried about turnaround costs adding up if revenue is declining. I mean, it's just a temporary cash problem if the revenue is increasing. And so, to me, this is a great example of a headline where if you're not kind of aware of your own perspective on the business, then you can easily just read it and be like, oh, Starbucks is done, right? Turnaround costs mounting is usually not a good thing. I'm not even going to say it is a great thing here. I just think it's interesting to take a look at it. So, Naman, have you seen this article and have you seen the Starbucks earnings initial reactions?
So saw the Starbucks earnings, have not seen this article. Short reactions. I was surprised that same store sales growth was as high as it was. And then the other thing that caught my attention was how much Starbucks has cut its prices in China to compete with chains like Luckin. And so when I think about Starbucks, there's really only two markets I care about. It's the US and it's China. Everything else to me is noise. And so a lot of what we're about to look at in terms of revenue, in terms of profitability, is centered in those two geographies. And I think that's just important context for everybody to know.
Love it. Well, right, here's kind of the subtext, right? They've hired more baristas and imposed new hospitality standards to entice customers back. So in our earlier work on Starbucks, which we will link to in this episode, we were kind of saying, hey, like if this is the problem, then this is the solution. I think that we put it with an asterisk because we weren't sure if people actually would go back to Starbucks if they had it. I think our biggest hypothesis was that shorter wait times would absolutely bring people back. But a higher level of service, bringing people back into the store to sit down, I have more suspicion about that as an issue. So obviously this is going to add cost to the business, right? So hiring more baristas, yeah, you might get faster service times, but part of the reason they were cut in the first place is that the hypothesis was that it wouldn't actually have dampening effects on revenue. And so we're just, we're starting with two beliefs that are not necessarily right or wrong, but they come from different operator perspectives. And the market is rewarding this one despite this number. That was what was, it took me a little while to figure out. So, profits tumbled far more than anticipated as the cost of a turnaround effort comes into sharp review. The net income plunged 47%. I mean, you're going to have a lot of things to answer to, so you better be darn sure that what is going to happen in the future is going to be great. So $558 million in total. Here's one thing that's important to know. They are still profitable. So there are turnarounds and then there are turnarounds. When I did turnarounds at Bain, there were some that were like, we are in bankruptcy and we have 18 months. This is a turnaround because the market returns were not satisfying investors. And so having a flood of investors leave you because you're not meeting beating market return expectations is what Starbucks turnaround is about. So worse than expectations for a 30% year-on-year decline, which wasn't great in the first place, but 47% beat 30% by a heck of a lot. So that's a ton of cash walking out the door for Starbucks. So that to me is kind of one of the huge things. Then if you haven't heard of this, the Green Apron Service model, 11,000 North American stores, as you mentioned, North America is kind of maybe the only market that really, really matters to Starbucks. Will feature an algorithm meant to deliver drinks to cafe and drive-through customers in fewer than 4 minutes. Really interested to see that impact. That's something I would track. But then I kind of kept going down. Here's where it started to get interesting for me. Shares rose 3.8% in after hours trading. So before I tell why, Naman, you already kind of like, you didn't bury the lead, but I think sometimes it's a little fun to do it. Why would shares rise after that dismal profit news?
Well, it's because your revenue's up. So the revenue was up 4%. And if I was an investor, I would have to believe to buy into Starbucks that revenue is more durable than the increase in turnaround costs. That I think is the calculation that the market is making. The revenue is stickier. And so we'll see if they're right. That's the story that Nickel and the leadership team are selling. I'm inclined to believe it at this point. But that is the short answer as to why shares would rise 4%.
They invested in a splashy conference in Vegas, which we actually talked about just after it happened because it was very interesting that they hadn't done that in a while. They talked about investing from within, and this decline again, right? Part of the turnaround cost is this investment in people, and because Starbucks is not just a coffee business but really a people business, they think of themselves as investing in the right things. This was interesting too. He also left like a little bit of a pin in price increases, which the market usually loves. And so that I think is kind of an interesting note. The high price of Starbucks drinks have put off customers. My best guess is they're going to raise the price on food, which I think is more of an inelastic add-on for a lot of folks. And so I'm interested to see what that turns into. But here's the deal, right? It's almost at the bottom of the article, but revenue rose 4% to 9.5 billion quarters. So it didn't just rise, which was a good piece of news in the first place, which means that early investments are paying off. Because if these investments aren't paying off, then the whole thing is done and nickel is done, right? But analysts had expected revenue of 9.3 billion, so they beat on revenue. This is
So
part of what leadership looks like in a situation like this, because nickel is saying, yes, we're going to invest a significant amount of money in the business, but I will deliver revenue increases at the same time, and I won't do it by raising prices, which means, like you talked about, right? What is more durable? Revenue or turnaround costs, it's revenue. What is more durable? Price increases or volume increases? Volume increases. And so he's delivering on the things that I think do matter to investors and should matter to the baristas and the operating business owners at Starbucks as well.
I think a little bit of a fly in the ointment is what you see in the next paragraph, which is just
Mhm.
that same store sales declined by 2%. And so when you see that, you're like, okay, if revenue was up but same store sales declined, like how did revenue increase? Well, two drivers. Number one, you opened more stores.
Mhm.
And then number two, there were other geographies that contributed to the revenue increase. And
Correct.
so
Mhm.
so so China was one of the geographies that contributed to the revenue increase, that sales increased there for the first time in 2 years. So that's also, good news because it is a strategic market for China. It's their second biggest, or for Starbucks, it's their second biggest. But the one thing that I'd also be paying attention to is, can Starbucks turn that same store sales metric around? Because what I don't want to have happen is my growth be predicated just on new store openings, because that's expensive and eventually you hit a saturation point. And so if I can't
Or
turn that
international growth, right?
or
Like
international growth,
international growth is kind of one thing that should augment your core business, but never replace the
100%.
core business.
And so that's what I'd be looking at moving forward. I think Nickel's still in a honeymoon period, but eventually that metric is going to determine the future of Starbucks' share price.
Agreed. Well, I thought this was an interesting goodie but quickie this morning. But we've kind of looked at a couple of the in-depth insights at the turnaround point early on in the Starbucks tenure. We looked at the news when Starbucks did the conference a couple of months ago. And so I think that Starbucks is a really interesting story because it is the kind of place where you can go and test your business acumen in the wild. So it's worth it for you to go sit in a Starbucks or drive through a Starbucks, see if you notice any changes. Think about why you would or wouldn't be at Starbucks and how frequently you'd be there. And also just to kind of dig into the financials because they're pretty easy to understand relatively to some of the other businesses that we cover here. So I think this is a pretty fascinating business. I think you're likely to see it because it's impacted by a lot of the macroeconomic issues inside case interviews as well. So we hope you have fun with this little mini case study today on Starbucks.